What separates a successful investor from an ordinary one? It's not just about picking the right stocks or getting lucky. Imagine turning $500,000 into over $1 billion with a single tech investment, or making $1 billion by betting against a currency. In this video, we'll explore the strategies behind some of the most successful investments, like Warren Buffett's Coca-Cola play and Peter Thiel's early bet on Facebook. Stay tuned, because these real-life examples reveal the key principles that can make or break an investment. Let's kick things off with a legendary investor and a timeless beverage, Warren Buffett and Coca-Cola. It's a story that perfectly illustrates the power of simple, long-term investing. Back in 1988, Buffett made a bold move, investing $1 billion into Coca-Cola. Now, that's a lot of money, even for the Oracle of Omaha. So, what was he thinking? Buffett wasn't chasing short-term gains or following the latest fads. He saw something special in Coca-Cola, a durable competitive advantage, what he calls a moat. Coca-Cola had a globally recognized brand, a loyal customer base, and a product that people simply loved. Buffett understood that no matter how much the world changes, people will still crave their favorite refreshing drinks. His decision wasn't based on complex algorithms or Wall Street wizardry. It was grounded in simplicity, common sense, and a belief in long-term value. And boy, did it pay off. That $1 billion investment blossomed into over $20 billion by the early 2000s. And it's not just about the share price appreciation. Coca-Cola continues to shower Berkshire Hathaway with millions of dollars in dividends every single year. The takeaway? Sometimes, the most effective investment strategies are the simplest ones. Sticking to timeless businesses with strong fundamentals can lead to remarkable long-term success. Peter Thiel's bet on Facebook. In 2004, a time when Facebook was just another ambitious startup in Silicon Valley, a fledgling social network with big dreams. Many investors dismissed it as a passing fad, a college project with limited potential. But one investor saw something different, something extraordinary. Enter Peter Thiel, a man known for his unconventional thinking and bold bets. He didn't just see a website, he saw a revolution in the making. Thiel recognized Facebook's unique ability to connect people on a massive scale, its early dominance among university students, and the unwavering ambition of its young founder, Mark Zuckerberg. While others questioned the valuation and future profitability of a social network, Thiel focused on the bigger picture. He envisioned a world where Facebook would become the central hub for online interaction, a platform that could transform communication, commerce, and even social movements. Thiel's investment wasn't just about numbers. It was about believing in a vision, in a company with the potential to disrupt an entire industry. And that belief paid off handsomely. His initial $500,000 investment transformed into over $1 billion after Facebook's IPO in 2012. It's a testament to the power of recognizing disruptive potential and betting on visionary leaders. The lesson here? Sometimes the greatest returns come from seeing what others miss. From investing in ideas that seem audacious, even revolutionary. It's about recognizing the spark of disruption and having the courage to back it. The early days of Bitcoin. Now let's fast forward to a more recent phenomenon that's captivated the world: Bitcoin. Back in 2011, Bitcoin was a niche concept, a digital currency whispered about in online forums and tech circles. It traded for mere dollars, a blip on the radar of most investors. But some early adopters, those with a keen eye for disruptive technology, saw something special in this nascent cryptocurrency. These pioneers recognized Bitcoin's potential as an alternative form of currency and a store of value. They saw beyond the skepticism and the volatility, understanding that Bitcoin's unique properties, its decentralized nature, its independence from central banks, and its limited supply set it apart from traditional currencies. While many dismissed Bitcoin as a speculative bubble, these early investors believed in the underlying technology, blockchain, and its potential to revolutionize various industries. They took a calculated risk, investing in an emerging technology that was still largely unproven, and their conviction paid off spectacularly. By 2021, Bitcoin had surged past $60,000, turning early investments of a few $1,000s into millions. It's a testament to the power of recognizing disruptive potential and being ahead of the curve. The key takeaway? Sometimes the greatest rewards come from taking calculated risks in emerging technologies. It's about seeing the future before it arrives and having the conviction to invest in it. Now, let's dive into a high-stakes investment strategy that made history. George Soros's audacious bet against the British pound in 1992, a day that would forever be known as Black Wednesday. Soros, a legendary investor with a knack for spotting market imbalances, recognized that the British government's attempts to keep the pound artificially high within the European exchange rate mechanism, ERM, were unsustainable. He saw the writing on the wall. The pound was overvalued, and a devaluation was inevitable. Soros, with his deep understanding of global economics and unwavering conviction, took a massive short position against the pound, essentially betting billions that it would fall. It was a bold move, a challenge to the very foundation of the British monetary system. On Black Wednesday, September 16, 1992, the inevitable happened. The British government, despite desperate attempts to prop up the pound, was forced to devalue it. Soros's prediction came true, and his bold bet paid off spectacularly. Soros reportedly made over $1 billion in profit, cementing his reputation as one of the greatest investors of all time. But more importantly, Black Wednesday became a legendary example of how a single investor, armed with thorough analysis and unwavering conviction, could challenge and even outmaneuver governments and central banks. The lesson: sometimes the greatest investment opportunities lie in identifying unsustainable situations and having the courage to bet against the prevailing trends. It's about understanding the underlying forces that drive markets and having the conviction to act decisively when the odds are in your favor. Let's turn our attention to a company that has revolutionized the way we shop, read, and even watch movies: Amazon. Jeff Bezos' journey with Amazon is a masterclass in long-term vision and the power of reinvestment. From the outset, Bezos saw Amazon as more than just an online bookstore. He had a grander future plan. A plan of a vast online marketplace where customers could find anything and everything they desired. To achieve this, he made a bold decision: reinvest every penny of profit back into the company. While this frustrated some early shareholders who were eager for quick returns, Bezos understood that building a lasting empire required patience and a focus on the long game. He poured Amazon's earnings into expanding its infrastructure, developing cutting-edge technology, and venturing into new markets. This relentless pursuit of growth transformed Amazon from a humble online bookstore into a global behemoth, a company that touches nearly every aspect of our lives. Today, Amazon is a household name, synonymous with online shopping, cloud computing, and even space exploration. Those who believed in Bezos' vision and held on to their Amazon shares from the early days reaped astronomical rewards. Their patience and trust in Bezos' long-term strategy paid off handsomely. The key takeaway? Sometimes, the most lucrative path is not the quickest one. It's about having the foresight to invest in the future, even when it means sacrificing short-term gains for long-term dominance. Amazon's story is a testament to the power of patience, long-term vision, and unwavering belief in a transformative idea. These case studies highlight different strategies that led to incredible financial success. Whether it's sticking with simple, timeless businesses, betting on disruptive technologies, or seeing opportunities others might miss, each decision required a mix of foresight, courage, and discipline. By studying these real-life examples, we can better understand how to navigate our own investment journeys. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. Thank you for watching. If you enjoyed this content, please consider subscribing and leave your comments below. See you in the next video.